CNBC TV 18, celebrating 16 years of business leadership.
It doesn't make any sense to hike, but then, basically signal this is it. I mean, one and done makes no sense.
Basically speaks to raising interest rates very, very gradually.
They must be prepared to tighten and then within 6 months go to negative interest rates.
It's going to be a rate hike that's going to be wrapped in a very dovish Christmas package.
Normally, when the Fed gets ready to tighten, it's because the economy's picking up speed and accelerating, and top-line revenues and corporates are accelerating. This time, we're 2 or 3 years past that moment in the recovery.
Well, the Fed's doing this because they see the economy strengthening.
I think they should have hiked a long time ago, and I think actually they're coming late to the party.
The market will welcome some sort of commentary out of the Fed, which the market's desperately seeking.
Will she, won't she? We are almost there. Is Janet Yellen going to bite the bullet? Will we see the first rate hike in the United States in nearly a decade? All the answers will be known at midnight. CNBC TV 18 is going to get you all the action live from Capitol Hill and a mega build-up to that big decision. Good evening and thanks for joining us here on India Business Hour. I'm Nantara Rai and joining me tonight is Ron Joy Banerjee. Hi, Ron.
Hi, Nantara. Here are the headlines this Wednesday night. It's Judgment Day in Capitol Hill. The US Fed is all set to hike rates according to a CNBC survey. Markets across the world are rallying in trade ahead of that decision.
Supreme Court cracks the whip to clean up the capital's toxic air, bans new diesel SUVs and luxury cars from the National Capital Region till 31st of March, doubles the green tax on trucks and orders all cab operators to switch to CNG within 3 months.
Stung by the verdict, Motown gets into damage control. Mahindra & Mahindra says 2% of monthly sales will get hit. Tata Motors also fears sales impact. Mercedes-Benz threatens to cut investments in India.
Government gives up on GST this winter session, rules out any more talks with the Congress party. Sources say the deadline for the rollout could be delayed till 1st June of 2016.
The cabinet waves the green flag for commercial coal mining by state corporations, but the doors are still not open for private companies.
The Enforcement Directorate raids Karthi Chidambaram once again in connection with the Aircel Maxis case. Former Finance Minister P. Chidambaram says his son is being harassed by the government.
Arun Jaitley must resign, demands the Congress a day after Delhi CM Arvind Kejriwal targets the finance minister, accuses CBI of reading the Delhi cricket probe file in the raids.
Google Sundar Pichai is in India, promises to bring internet connectivity to 100 railway stations by next year, is going to partner with BSNL for the Loon project. Details of Sundar Pichai's maiden visit to India since taking over coming up on the show.
Reserve Bank is set to increase provisions on Discom's loan restructured under the Uday scheme and SDR cases, but will look at spacing provisions according to profit and capital trends. That's a CNBC TV 18 exclusive.
We told you first, and it's now official. Centre hikes excise duty on petrol and diesel. Finance Minister tells CNBC TV 18 this could add 2,500 crore rupees in collections this fiscal.
Supreme Court orders the testing of Maggi samples by a Mysuru lab. Nestle agrees to the order as the Apex Court stops the Consumer Dispute Redressal Commission from hearing the class action suit.
And our top story tonight, what else can it be? The US Fed, it is Judgment Day in Capitol Hill, Wall Street and the world bracing up for a rate hike from the US Federal Reserve later today. This will be the first rate hike in nearly a decade. Not just that, a CNBC survey shows many are expecting 3 rate hikes in 2016. So maybe 25 bips tonight and 3 rate hikes all through 2016. What should you watch out for in Janet Yellen's statement later tonight? Here's CNBC's Steve Leisman from Washington. Over to you, Steve.
If the Fed announces a hike today, it will have been, folks, 6 years, 6 months since the end of the recession, 7 years since they hit zero in December that year, 9 years, 6 months since the last rate hike, 11 years, 6 months since the last tightening cycle. I believe I had kids who were 6 and 4, one now going to college since that first time 11 years ago. Now, what to expect from Fed Chair Janet Yellen and the Federal Open Market Committee. Today, they have a major challenge explaining their actions to the street on the one hand and to the public on the other. The street wants to know about the policy outlook, so here's some of the things to look for. Does gradual path make the statement? In other words, how they describe future rate hikes. Some debate about whether or not they lock themselves in with language like that. Expect some positive economic commentary in order to justify these hikes. Look in the summary of economic projections for the Fed to lower their own forecasts about where rates are going to go. Does Yellen signal some form of a pause at the press conference? And then does she explain future policy goals so that the street itself can factor in where rates are going? We're moving from an era of what was pretty clear monetary policy goals. It was to increase inflation and reduce the unemployment rate. But how does Yellen today communicate those new goals from raising rates? Is it to keep inflation from rising, stop unemployment from falling, or is it simply to take out insurance on a potentially overheated economy and potential inflation in the future? It's a major challenge communications-wise. She has to explain the path to markets and the reason for higher rates to the public.
Therefore, a rate hike seems almost certain. There could be 3 more in 2016. That's according to the CNBC survey. But how will this impact global and emerging markets? Will Dalal Street feel any aftershocks tomorrow? We've got all corners covered. Here are some global and domestic market experts with their expectations.
It doesn't make any sense to hike, but then, basically signal this is it. I mean, one and done makes no sense. They don't want to do one and done. The idea is that the time has come to start normalizing, and I think they want to normalize gradually. Of course, they can't make any real promises on that because they don't know how the economy is going to evolve. But the expectation is that this is the first in a series of hikes.
Jim Cramer back in 2007, the Fed, he almost forced them to start cutting. So, in other words, credit in 2007 changed the Fed policy path. It changed it. And the same dynamics are happening today. It's setting up for potential. The Fed wants to do a number of hikes next year, but credit could overrule them.
Normalization of U.S. monetary policy resulting in risk appetite globally reducing will continue through 2016, and that obviously has, that obviously means emerging market equities and Indian equities will face pressure from FII outflows. Emerging markets as an asset class will face redemptions, and hence FII equities flows supporting the Indian market, I think, will become a story of the past.
Will markets in India fall for a sustained period of time because of this? Will the economy be hurt specifically on account of this? What will happen to the rupee on account of this? You have 30 seconds to answer all of this, so you have to be specific.
Let's talk Thursday morning. Assume the Fed hikes. I think the market will rally.
The Fed rate hike is going to be a non-event. It's going to be a complete non-event for a couple of reasons. I think one, markets have broadly factored this in. They've known what's coming. They have the range of outcomes, and I think they've been, they've done what they needed to do. I think the Fed is run by highly competent people, and I think there are folks sitting outside who are worried about them doing something silly, when actually if you look at generally their record, I think they've generally been a very responsible central bank, and so I don't think they're going to do something which is going to, bring the world into crisis.
And you can catch all the action from the US live right here on CNBC TV 18. We will be getting you all of the action live. Let's just do a quick check of how Wall Street is trading at the moment ahead of that crucial Fed decision. You'll see the frontline indices on your screen. We have seen a pretty strong gap up opening, that trend continuing. Dow Jones up by 60 points, the S&P 500 up by 0.75%, and the Nasdaq up by about 10 points or 0.2%. Across the Atlantic, we've seen the European markets also reacting very positively and with optimism ahead of Janet Yellen's statement. See how the British FTSE up by about 0.7%, the German DAX up by 43 points, and the French CAC meanwhile up by almost 0.5% in trade. Back home, the Wall Street going into the crucial Fed decision like the rest of the world with optimism. The short covering rally continued even though the gains today were capped. Let's talk about the Nifty first. That gained 50 points. The stocks gained for the third straight session. Onto the Sensex, that surged over 170 points, and more importantly, it's moved well beyond the 25,000 mark. And this is the big story that came in from the Supreme Court, a landmark verdict. The Supreme Court today cracked the whip to clean up the capital's toxic air. A slew of measures, including a ban on new diesel SUVs and luxury cars, and a 100% hike in green tax on trucks have been imposed. And here's the kicker. This ban is not just for Delhi. It is being imposed on the entire national capital. So it's not just on Delhi. It's not on the residential hub of Noida or even the MNC capital, as it's called, of Gurgaon. This area for the ban encompasses 34,000 square kilometers. It includes industrial areas like Panipat and Sonipat in Haryana, Meerut and Bulandshahr in Uttar Pradesh, as well as Alwar in Rajasthan. So that means car sales are not going to be impacted only in Delhi, but the entire national capital region. It's also going to impact the movement of commercial vehicles. It's going to impact economic activity as well. Ashmit Kumar, who was there in Supreme Court tracking that landmark verdict, now joins us live. Ashmit, as I understand it, there are 5 important measures that have been announced by the Apex Court. How easy or difficult are they going to be to implement?
Were to buy into some of the comments that we'll hear later from Hari Salve, the amicus. But first, to take viewers through the fine print, as you pointed out, yes, there are 5 key takeaways. First, of course, is the ban on registration of diesel cars, and this is effective immediately. And we are looking at a 3-month window. This will be effective for at least for a little over 3 months, in fact, till the 31st of March. The important thing to keep in mind that the threshold that the Apex Court has prescribed is 2,000 cc. So all diesel cars in excess of 2,000 cc, the engine capacity will not be registered in the NCR region. Moving forward on to the second aspect, the Supreme Court has given a strong push by way of this order to ensure that all cabs, and this involves aggregators as well, all cabs plying within the city limits are in fact given a push to move from diesel to CNG. The deadline for that has been set at March 1st. That's point 2. The third point is that the ECC, or the Environment Compensation Charge, has seen a 100% increase. So trucks destined for the national capital will have to pay an ECC that is now increased from 700 to 1400 and 1300 to 2600. The fourth takeaway is that the Apex Court has clarified that only trucks bound for the national capital that have goods carrying meant for the national capital will be the ones allowed inside. The other trucks will have to take alternate routes. And finally, and perhaps this is crucial here for the transport sector, that the Apex Court has clarified that trucks destined for Delhi that are registered prior to 2005 in no shape or form will be allowed to enter the city limits. So that's, of course, the long and short of the Apex Court's arguments. Of course, there are various challenges with respect to implementation. On that note, in fact, I caught up with the amicus Hari Salve as well as the Additional Solicitor General Pinky Anand. Let's listen in.
They need commercial breathing space. We need air to breathe. So it's not something which is comparable also. If there are other ways of giving relief to air pollution, those will also be followed. Not a tax being imposed by the government or some arbitrary fiat of the government which should be subject to the favorite Indian pastime of dodging laws. Governments are keen to implement this order. These orders are all passed in consensus. And if governments want to implement the order, believe me, they can. And today we have technological resources.
I think these kind of changes that have been made is really a landmark situation in the history of India, and particularly right now it is Delhi and NCR, but subsequently we see it happening for any part of the country that may be required. And since it was taking time, the point is the winter months are the worst. So there's no time to wait for something else to come into being. It had to be done like ASAP. So I think it's been an extremely interesting development.
It may be a landmark judgment, but the Supreme Court's wrap on diesel vehicles in the Delhi NCR region to deal with the region's worsening air quality has given Motown a severe jolt. A shocked industry has said that the order is based on inaccurate information and will cause serious damage to the industry, including job losses. Farah Bukwala Bora gets us a wrap of all the top reactions.
2015 ends on a sour note for the auto industry, and specifically for Mahindra & Mahindra, one of the worst hit by the Supreme Court order to clean up Delhi's air. This is because 100% of its portfolio is powered by diesel, and the 5 key models that make up a bulk of its sales, the Scorpio, Bolero, XUV 500, Thar and Xylo, have an engine capacity above 2 litres, which has now been banned by the Supreme Court. Anand Mahindra, the chairman of the Mahindra Group, was quick to put forth his opinion. So even if we believe the decision on diesel vehicles isn't optimal, we'll honour it and develop vehicles that comply with their stipulations, he tweeted. M&M's executive director Pawan Goenka said this order would affect 2% of its monthly sales in the Delhi NCR region, which accounts for 5% of its overall sales. He added that the company's bigger worry is that inventory worth 100 crore rupees has piled up at the company's dealers in the Delhi NCR region.
Really working with our teams in the sales and marketing area and working with the dealers to find a solution so that our dealers are not unduly sort of coming under pressure.
Goenka said M&M will redesign its upcoming engines to bring them below the 2-litre mark, but this is easier said than done. CM President and Ashok Leyland Managing Director Vinod Dasri called the order illogical and unfortunate.
The government of Delhi had conducted a study which says that 20% of the pollution in Delhi comes from road transport. Out of this 20%, 15% is from passenger cars. That makes it 3% coming from passenger cars. And more than half the vehicles in Delhi are not diesel. So you're down to about 1%. The second thing you will have is that you're banning purchase of new vehicles. So what will person do? He will continue to use his old vehicle. And that is 10x more pollution than what these vehicles used to, the new vehicles have.
Japanese car makers Toyota and Tata Motors will also be hit. While Toyota's mainstay products, Innova and Fortuner, are diesel-led and have engine capacities above 2 litres, Tata Motors' utility vehicles Sumo Gold, SUV Safari and MPV Arya will be affected too. Tata Motors said it will see some impact on its sales until the 31st of March. But the pain is much deeper for luxury car makers Mercedes-Benz and Tata Motors' own JLR, as their entire diesel range is powered by above 2-litre engines. In a statement, Mercedes-Benz India said, and I quote, "We think this decision is going to adversely affect the auto industry as a whole and will certainly encourage the creation of an unequal ground. This ban on diesel engines also creates an environment of uncertainty and will severely impact our expansion plans and future investments put in place for the Indian market." End quote. This is pertinent as the Delhi NCR region accounts for 20% of the overall luxury car sales in India. However, the Supreme Court's decision to disallow trucks registered prior to 2005 within the city's borders has found merit, as Dasari of Ashok Leyland said it will spur demand. In Mumbai, Farah Bukwala, Vora.
So what will be the larger implications of the Supreme Court order, both from an environmental standpoint and from the OEM standpoint? We get you a detailed conversation little later on the show. Shifting gears then, state-run companies can now sell coal commercially. This after the cabinet today decided to include medium and small enterprises under the Coal Mines Special Provision Act for the sale of coal. This means government has allowed commercial mining of coal for the medium, small and cottage industries of central or state PSUs, which will get coal supply by the coal-bearing state government. The move is aimed at reducing the dependency on coal imports. This breaks the monopoly held by Coal India when it came to commercial mining of coal.
In fact, let's discuss more of that decision taken by the cabinet earlier in the evening. Coal Secretary Anil Swarup joining us on the phone line. Thank you so much for joining us here on CNBC TV 18, Mr. Swarup. My first question to you is, have you decided how this coal can be priced? What are going to be the kind of rules that these state PSUs or the central PSUs will have to adhere to?
No, we have not introduced any pricing formula for selling of coal. The new initiative actually enables such state entities to, we have dispensed with the end-use stipulation that was there earlier. You would recall in the past, either allocation or auction of coal blocks, there was this end-use stipulation, which prevented such entities which mined this coal from selling this coal to anybody else. They had to use the coal themselves for their own unit or their own entities. Now, when the coal block will be allocated to state or state entities, they will be in a position not merely to use the coal for their own units, but they would be in a position also to allocate or sell coal to other entities, which includes private sector entities. The primary objective of this decision is to enable supply to small and medium sector units, even micro units, because for Coal India to supply to these units was becoming increasingly difficult. The focus of Coal India was obviously for larger units, and smaller units were starved for coal. And it is with that objective in mind that the coal sector has been opened.
And Mr. Swarup, you know, a lot of people will read this decision, like you correctly pointed out. Maybe MSMEs weren't the focus area for Coal India. But if we could ask you, what could be the possible financial implication on Coal India, since its monopoly on this is going to come to an end? Any kind of math that you have done, what is going to be the financial implication? How do you think investors might also react to this? And I ask you this because Coal India is a disinvestment candidate.
No, I don't think it will impact the finances of Coal India, because there's such a huge demand in India for coal. If you recall, last year we imported about 215 million tons of coal. So there's a huge gap between demand and supply within the country. And we can't keep the small and medium sectors starved of coal. And they are also not in a position to import coal. So in that sense, they were either getting it from the grey market or from somewhere else. All that will be eliminated. I don't think it will impact the finances of Coal India at all.
It's good news. It should not impact Coal India. Mr. Swarup, my final question to you, and this is what everybody wants to know. Fine, you've allowed coal mining and the sale of commercial coal when it comes to the decision taken today for PSUs. When are you going to allow the private sector players to enter the fray?
No, we've moved in that direction. To begin with, we had end-use stipulation. Today, the cabinet has taken a decision to remove that end-use stipulation for the public sector entities. And we are working out the details for commercial mining for the private sector as well.
And so how soon can we expect that?
It may take a bit of time because there are certain aspects that are being examined, but it will come soon.
Okay, so that's the other headline you've given us tonight, Mr. Swarup, that we would see guidelines for commercial mining. The steps are being taken towards that. Thank you so much for taking the time out and joining us here on India Business Hour. Moving on, the government's given up on its hopes of passing the goods and services tax in this winter session of Parliament. Sources say the centre is not relying on the Congress and is hoping to get the numbers by the budget session of Parliament, which will of course be in the month of February when it will convene. Ritu Panabihar now joining us with that story. Ritu, you know, earlier in the day, the Finance Minister Arun Jaitley met with industry chambers. He met with trade unions as well, and where he said this is a test of parliamentary democracy, and since Congress is failing to live up to that, the government should have numbers overwhelmingly on its favour by the budget session of Parliament. So is that the new strategy? Go ahead with the goods and services tax once the numbers in Rajya Sabha begin to change.
You know, according to internal calculations done by the BJP, they believe that by March 2016 there will be at least 17 MPs from pro-GST parties, and hence the government now believes that there is no need to beg and plead and ask the Congress to support the constitutional amendment bill on GST. The government believes that it should go ahead and pass and push for passing the bill in the budget session of the Parliament, which is in 2016. And not have any kind of a arrangement as of now with the Congress, because it believes that the days of begging and pleading with the Congress are over as far as the constitutional amendment bill on GST is concerned. Remember that once that is done, even then the April 2016 deadline will not be met. But there is a possibility that the government may actually push for a GST rollout within the calendar year 2016. Of course, for that, we'll have to wait for the budget session of Parliament, because more clarity on the rollout will emerge by then. With that, it's back to you.
Thanks, Ritu. It's a homecoming of sorts for Google's India-born CEO Sundar Pichai. This is Pichai's first overseas visit after taking over the reins of the company post-restructuring. Pichai walked the corridors of power and articulated Google's plans for India, which include focusing on beefing up Google's vernacular offering and even launching the ambitious Google Loon project, which Pichai describes as a floating tower to improve connectivity in rural areas. Megha Vishwanath brings you the key highlights of Pichai's first day in India.
Google for India, that's not just the name of this event, but also the cornerstone of Google's global strategy. The three-step approach of bringing the next billion people online is simple. give them access, make products work better, and finally push Indians to not just be consumers but also become developers and content creators. Over the next 2 minutes, we will be bringing you the key takeaways from this event, and let's start with Google's mission of connecting 400 railway stations to Wi-Fi.
Getting people connected is a foundational goal. This is why just a few months ago, we announced the largest public Wi-Fi project in the world. We are partnering with RailTel and Indian Railways to bring connectivity to over 400 railway stations across India. This will cover 10 million passengers every day. We are on track to get 100 stations online by the end of the year, by end of 2016. And as I speak, the team is setting up infrastructure in Mumbai Central.
To strengthen this Internet for All mission, Google's Rural Internet program is being rolled out to 300,000 villages in India. But it's not just about providing Internet, it is about making it user-friendly. For this, Google is going desi.
Android already now supports 7 Indic languages, and we are taking our mobile applications like YouTube and making it work in many Indic languages as well. The keyboard input in Android is now supported by over 11 languages.
To action this plan, Google has partnered with handset brands Lava and Intex to add these Indic keyboards on their devices. So access to network? Check. Can it be used by locals? Check. But hey, what about data charges?
We are making our products work offline. Earlier this year, we announced Maps offline, and it's working really well. And with YouTube, we announced YouTube offline with Android One a year ago, and now we have rolled that to over 77 countries globally.
So now you can get a turn-by-turn navigation even on a dead network. Thank you, Google. Then Google spoke about the elephant in the room, Project Loon, which is basically Wi-Fi in a balloon designed especially for inaccessible areas. While Telecom Minister Ravi Shankar Prasad burst their bubble quite literally by suggesting that Google's Project Loon will interfere with cellular transmissions in India, he seems to have had a change of heart.
In principle, we are agreeable for a pilot project. We are quite open to the idea of the Loon project.
So there it is. But before we wrap up, entrepreneurs, behold, Google Capital is looking to invest $20 million to help 1,000 Indian startups. In New Delhi, this is Megha Vishwanath.
I think Sundar Pichai is right. The Google Map offline has been a great feature welcomed by everybody around the world. With that, we have to say goodbye. Thanks for watching India Business Hour. Stay tuned to CNBC TV 18. All the Fed action continues right here.
CNBC TV 18, celebrating 16 years of business leadership.